You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures market. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody. That music means we are back. It is Wednesday. No rest for the wicked. Hot off a doubleheader of Options Bootcamp listeners. We're diving straight into the realm of futures with the Futures Rundown. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are binging. Remember, if you want more binging opportunities in your life, theoptionsinsider.com/pro. That's the place you had to be if you wanted to hear that doubleheader live with myself and the other Dan, Mr. Dan Passarelli, over there. 2 episodes in the can for you folks, as well as awesome pro Q&As. Options Oddities coming up later this week after Volview is going to be a banger this week. You want to check that one out. Great unusual activity there. theoptionsinsider.com/pro is the place to go to check all that out. Do so before the end of the month. Get your name in the hat for the June Pro Trading Crate. Trust me, you want to win one of those at least in your trading life. It just completes the circle out there at the end of the day. theoptionsinsider.com/pro is the place to go as we go around the horn, see who's joining us today on the old Futures Rundown. And I am pleased to welcome back our old pal, none other than Dan the Man Gramza from Gramza Capital Management. Mr. Dan, welcome back to the Futures Rundown, sir.
Well, thank you, sir. Great to be with you, Mark. Look forward to exploring some of these markets with you.
Our chat is already excited, Dan. They're already looking forward to some big adioses. I don't want to color your analysis. I don't want to force you into any big adioses before you're ready to give them. They need to come organically. I'm just saying they're excited for it. So when you hit it, maybe there's a drinking game they could do with that. I don't know. We'll see. As we keep
we'll see.
We keep on rolling, listeners. It is time to enter the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody. Let's get to it. See what's lighting up the futures markets this week. Before we get to our green and our red winners and losers, upside and downside movers, call them what you will for the week, Mr. Dan. Obviously, a lot going on out there in the markets. What's lighting up your tape in the futures world this week, sir?
Well, there's quite a bit happening, especially in terms of anticipation. is what I call it. Even though the market, and we see it responding that way. For example, the stock markets right now, we're seeing buyers coming in. I look for further movement to the upside, provided we don't get any unique surprises. We're also seeing a change in the US dollar. It is down, and we're looking for that to continue as other currencies get stronger. Bitcoin wants to go higher. Buyers are here. Let's see if they can get the job done. Interest rates sideways move is what I'm looking for right now in that market, unless we get something unusual coming out there. Crude oil, nat gas doing what they should do right now, and that is go down. I look for further movement to the downside, not only in those markets, but also in soybeans, corn, and wheat. Those are also feeling that downward pressure, may be approaching levels, though, that buyers may be coming back in to hedge. But right now, sellers are in control.
All right, good stuff. I see this coming in. I would normally save it till later in the question segment, Dan, but it's kind of germane to what we're talking about here. We have Mr. Unlimited asking the $64,000 question. What does Dan make of the Mideast conflict / drama / war? Obviously, Dan, it's all the talk of the town. We had, of course, the escalation of the war with Israel, or conflict with Israel and Iran. Our escalation this past weekend. Now the supposed, hopefully, ceasefire going on out there. We've seen a lot of drama on the crude oil front and the equity front, gold, and of course, vol space. What's catching your eye right now as it pertains to that conflict in the market, sir?
Well, I think the market's orderly in that regard. If we think about what's happening, and your summary was excellent, that's what's been going on. We had some bombing happening. We had it stopped. And now the issue is, how badly was Iran hurt? And supposedly, with the feedback I've seen, is that it wasn't decimated, but it was slowed down by a few months. So what does that mean for the future? Totally unknown. And for the marketplace, since we have this ceasefire kind of holding right now, you see it reverberate through the marketplace. Again, I call it anticipation type environment. In other words, it's the unknown. The market is responding because it's forward thinking. It's responding to the idea that something worse can happen, even though maybe it hasn't happened yet, but it's on guard. And I think that's what we're seeing permeate the market. It's also, now that there's this little light of ceasefire starting, and if that could continue to hold and the market confidence continues to rise, that maybe there's a calmness there, then we look for the stock market to start moving up. We look for the US dollar possibly to turn around. Right now, there's downward pressure on the US dollar. That's a whole topic into itself if we think about where the dollar fits in now globally, and the countries that are trying to disengage the US dollar in the financial system. The financial markets also raising in terms of price went up because yields cooled off a bit, because that risk cooled off a bit. So that's acting normal. Now, when it comes to energy, we're seeing, I think, the right responses. Crude oil's really come off, and so has nat gas. They've come off in a logical way, I think. If we look at where crude oil is trading, or let's do it this way. Why was it so sensitive to all this? And when we think about what's happening with that, we think about the Strait of Hormuz, and that's that tiny part where the shipping channel narrows between Iran and Oman. The big deal about that, 20% of crude oil flows through that area. About 20 million barrels a day. That's what flows through there. Now, let's think about Iran. Something we heard today, which was very surprising, is Trump said, hey, Iran, you continue to sell your crude oil to China. Now, they've already been doing that. The big customers of Iran, let's look at a little history on Iran. In the Trump version number one, Iran was squeezed down to less than 2 million barrels a day. In the environment in between, the next administration allowed that to go up to about where it is, almost 4.2 million barrels a day, and which allowed them to have some money to fund the things that they were interested in. China is the number one customer, the largest customer of Iran. India, number two. Japan, number three. South Korea, number four. So that crude oil from that part of the world flows towards those countries. So for Iran to try to shut it down, to mine it or do something like that, it's not in their economic interest to do that. There's one other thing that I do find interesting but not surprising. When Iran sells crude oil, which, as everybody knows, it's dollar-based, right? It's, as most commodities are, they're dollar-based. Well, Iran doesn't want to use dollars. China, their biggest buyer, they don't want to use dollars. Well, they get paid in yuan. So they're not using the dollar. It's an example of an exchange where they're moving away from the US dollar. And we're seeing other countries willing to have that flexibility, which is really a very interesting change. And I think it's something to monitor. But if we look at that tension, well, it's kind of been released. So let's talk about crude oil. So what does this mean for crude? If you look at the United States, there's a few areas where you can produce crude oil for around $20 a barrel. I think the Eagle Ford area in Texas can produce crude for about 20, but most producing companies, their cost to produce crude oil ranges from $50 to $64. Some of the Permian, for example, is $62. And where is crude oil trading right now? Around $65. So there's not a lot of profit margin. Ideally, these companies would want to see crude oil around $70 a barrel. And here's the rub that we always need to think about. From Trump's point of view, he wants energy out there. It's a drill, baby, drill, right? Well, if you and I are producing company, and our break-even price is around $65 where it's trading right now, is there a lot of incentive to produce a well? Some of these wells could cost $12 million to produce. And what's my return on that oil? My ability to get it out and to sell it. Now, one thing that's encouraging the industry is that Trump wants that crude oil. Previous industry administration was saying, we got to step away from carbon products. Trump has a different attitude towards it. So now for the production side, should we produce more? Should we drill more? It doesn't happen overnight. So from that point of view, we're right at this break-even level when it comes to crude oil. So it's a tenuous area. And we know if crude oil prices go too high, that has an impact on inflation. So we're going to have some issues there. So the right number, nobody knows what the right number is. If you look at the S&P 500, at some point, when we see crude oil prices going up, we see the major oil companies, their prices go up. But at some level, it now starts affecting the cost of doing business for non-oil producing companies. So what now becomes their magic number, because it's chewing into their profits more than they've accounted for. So it's a very tenuous balance, and nobody knows the right number. In nat gas, we got a lot of nat gas out there, and we're producing a lot of nat gas. And we need to think about not only the production side, but the demand side. If our global economy is holding its own, China's still not fully operational in that regard from an economic point of view, and they're the largest importer of energy. So that demand isn't there with both hands at this point. So, okay, we can produce more. Do we have demand to soak it up? So we see that not only with crude oil, but also with nat gas. That's weaker because we have a lot, even though the weather conditions in the United States are hot, and 1/3 of natural gas production goes to produce electricity. And because it's 60% cleaner than than coal. So we're seeing some advantages to that, but we're not seeing that demand picking up as people expected. So nat gas is in the same boat. Downward pressure right now, yes. And for crude oil, if you look at it from a price point of view, $62 to around $60, right in that range, it's where we expect to see buyers coming back in. In other words, possibly some hedging is what you'd look for there. In nat gas, we've got some room to the downside. Down to that $3 level is where we could get to before, and it's right now it's around 337, but we can get down to those levels before we start seeing buyers coming back in. I think for us, when you look at a chart, what's important for me is if it continues lower, that's fine. We don't really care from a trading point of view, but I think what we do care about is how it gets to those levels if it continues lower. So that's kind of what I monitor is what are the clues that price may be giving us in those markets. And right now, price is saying lower.
Epic answer to that question. So who asked that? Unlimited. Never let it be said you don't get your money's worth asking questions.
Well, that's a hell of a long answer.
It was a great answer. It's obviously the topic that is top of mind for everyone out there. The only problem was you didn't give anything to big adios, so we got to keep waiting.
No, we don't have a big adios.
No big adios.
I don't know.
They have to be organic. They can't be forced. Let's see if we can find some in our light side and downside movers here for the week. Let's go to the upside first. Let's keep the optimistic spirit alive. What is lighting up the tape to the top 5 this week, listeners? We're kicking it off with one of the EMs, not the one you might expect, though. It's uranium coming in up 1.88% this week. I think we have a listener question about that, so I might want to come back to that a little bit later in the show if we have time. Number 4, we've got our old pal copper, so we're getting base, listeners. Copper up 2.06% this week. Then we have a couple of pairs holding down the middle spot here. First off, we have the NASDAQ Micro and the E-mini, both up 2.14% for collectively the number 3 spot. And then number 2, another duo. We've got the Micro and the big Bitcoin futures up about 2.2 and 2.27% respectively for the number 2 spot, listeners. And then number 1, our old pal Platinum, up 6.32%. A lot of conspiracy theories, Dan, floating around about platinum and whether they're squeezing it to the upside. So anything catching your eye in our upside movers this week, Dan? We've got copper, NASDAQ, Bitcoin, and then of course, do you subscribe to that conspiracy theory around platinum, sir?
Yeah, I'm not keen on the conspiracy theory. And if that's true, that's been in place since earlier this year. I mean, if you look at, I think it was around April or so, we were around, I think it was 8.25. I mean, we're trading over 1,000, about 1,300 now. So it has come up quite a bit in just the last few months. If you think about, okay, who uses platinum? Well, we got it for some jewelry, but one of the main uses is for catalytic converters. Well, okay, are we producing a hell of a lot more cars right now that are record level car production means we need record levels of platinum? I'm not sure that correlation is there right now, but the fact is, technically, platinum is in an uptrend. From a technical point of view, it's trading above a previous swing high, which means that technically the trend is still in place. The next objective to the upside would be around 1380, and you'd want to see that occur in about the next week. So if indeed buyers are here in platinum, that's the kind of price action we want to see. But I'm not so sure about the conspiracy theories.
No tinfoil hat for you this week, Mr. Dan.
No, not this week.
You're right. If it is a squeeze, it has been going on for some time. So it's one of the longer, stealthier squeezes we've had going on out there, Mr. Dan. All right, to the downside we go, listeners. Let's lighten up our tapes to the red this week. Number 5, we're going out to heating oil, off nearly 8%, 7.91% this week. No surprise, going to have some energy on this list this week. Number 4, listeners, nat gas. What Dan was just talking about, nat gas taking it on the chin this week, off 8.26%. Number 3, this might come as a welcome surprise to some of you out there. We've been joking about the cost of our breakfast table here on the Futures Rundown. We've had pork cut out for the bacon. We've had OJ. We've had coffee. We've had milk. All kinds of things that make up a balanced breakfast on the show. And this week, it's coffee coming in at number 3. Taking a hiatus this week, off nearly 9%, 8.86%. So all of you who've been feeling the pinch at your local Starbucks every day, maybe that'll make you a little bit happier. And then we got a combo for number 1, listeners. So number 2 is technically our old pal, the VIX. They are crushing it, off nearly 10%. I know, percent of a percent. I gave up on that fight a long time ago, listeners. Listen to Vol Views if you want to take up that fight on VIX. Number 2 to the downside this week, off nearly 10%, 9.84%. A lot of that Middle Eastern vol juice coming right back down, which is why we've said many times, the right answer 9 times out of 10 for a lot of these Middle East conflicts is to fade the vol pop and fade the crude pop, and that seems to be playing out again this week. And then the number 1 downside mover, speaking of fade in the crude pop, listeners, it is crude oil, both Brent and WTI hanging out at the top spot, right around 10.5% to the downside for each of them. So Dan, we already talked about crude. We talked about nat gas. Anything catching your eye, though, in equity vol or in coffee this week, sir?
Well, coffee's in its own little realm when you think about what's happening with that market. It's a market that really is very sensitive from a global point of view. And it's also one, we were talking about what's happening with platinum. Well, coffee is also a market, and it was the latter part of April that we saw a market peak out, and it's been in the downtrend since then. We're taking out the lows that we had in April. And so further movement to the downside, wouldn't be surprised to see that in coffee. Sellers are here. And what's going to be interesting, though, is Friday. Now, 2 days ago, coffee found buyers right at a little bit above the levels we are right now, around 311. We found some buyers. The next day, we broke to the downside. That was yesterday. Today, we're also breaking lower. If tomorrow we trade back and close above 311, that would imply a kick back to the upside. Now, that could be a big adios to the downside, because it would imply rejection of these lower prices. So the only thing that's changed over the last few days, 3 days, is we're seeing evidence that buyers are trying to come back into this market. And so what's going to be interesting is, 1, how do we close out Friday? Do buyers come back in? Are those sellers buying to take profits, or has coffee gotten so cheap that people say mine at these price levels and buyers enter the market? So how we go into the weekend, I think, is a sign of our sellers in control, or is it changing? If buyers do come into this market and we close above 311 on Friday, the big deal would be for Monday that we close above 320. You want to see evidence that buyers are here. And by next Friday, 330 to 340 is where you'd want to see this trading. That would imply a big adios to the downside and welcome to the buy side with buyers. But I'm not sure the fundamentals will support that, but that's the price action that we'd look for in coffee.
We got our big adios, sir. It came in coffee, of all places, today. See, you never know where the big adios is coming, listeners. Well, let's get out to see what's lighting up the tape out there today, listeners. Is it a rock'em sock'em robots day in the futures market? Not really. Lately, we've been using this barometer of 300,000 contracts to break into the top 10. If it's above that threshold, it's at least a respectable day. If it's below it, it's kind of quiet. Hanging out a little bit shy of 250,000 contracts to break into the top 10 this week. That gets us to our old pal crude oil, 243,000 contracts on the tape for the August contract. The lone August offender on the list today. Everything else is September, with the exception of number 9, our old pal 3-month SOFR, still hanging out in December like it likes to do. 294,000 contracts for the number 9 spot. Number 8, to the equities we go, the NASDAQ E-mini. Again, everything else on this list is all September, listeners. 323,000 contracts on the tape. Number 7, the Ultra 10-year, 340,000 contracts. Number 6, keeping it in the rates for the 2-year, 467 on the tape. Number 5, the S&P 500 Micro. Again, take the micro volume, bit of a grain of salt, listeners. Nonetheless, 607,000 contracts on the tape for the number 5 spot. Number 4, the big dog, at least what's left of the big dog now that the actual big contract has gone the way of the dodo. It's the S&P E-mini, 638,000 contracts on the tape. Number 3, back to the rates we go. It is the 5-year, 791 on the tape. Number 2, back to the equity micro land. And lately, the only product on the tape that seems like it has a chance of vying for the top spot with the 10-year, it is the NASDAQ 100 Micro. Can't quite do it today, even though they're within spitting distance of each other. 909,000 contracts for the Micro. That means the big dog, once again, the 10-year note, listeners, 1.07 million contracts on the tape. By the way, if you are interested in all things rates, make sure you check out the newest addition to the network, the European Market Brief. We went deep into the European equivalent of a lot of these rates products. So if you like the 10-year or the 2-year or the 30-year, and you're saying, what can I do across the pond that may give me some similar exposure, but in the European markets? Well, we covered that on the European Market Brief this week. A great episode, if I do say so myself. Dan, we talked about crude already, and we touched a little bit on equities. If you have more to add on equities, have at it. And then also, obviously, a lot of rates in our top 10 this week as well. Anything catching your eye there, sir?
Well, Mark, I love it when you do this, because what you just told us is not only where that volume is. What does volume represent? It represents market activity. It represents people who have an opinion and they're expressing that opinion and they're willing to hold on to it. So I find that interesting. And the two major complexes, other than crude at the bottom, have everything's been interest rates and equity, right? And it makes sense, because if we think about risk on, which means money capital flows towards a stock market, well, the money's got to come from someplace. And it can come from commodities, it can come from gold, it can come from interest rates. So people say, something, I am willing to expose my money to this risk. So I'm going to sell that 10-year note futures and I'm going to buy some equities. So we see that dynamic between interest rates and the stock market. So I think what we're seeing here is that underlying theme in these numbers that you just shared with us. It's logical from that point of view.
If you like those numbers, we got some more for you, Dan. So be prepared to get even more excited as we break down some of the trends so far year to date. It's kind of wild, Dan. It seems like 2025 is still kind of new, but we're already halfway through. So we have some clearly established trends breaking out to the upside and to the downside this year. Let's start to the upside, listeners. What's number 5 to the upside so far year to date? It's our old pal copper kicking things off in the base metals, up 20.63%. Number 4, listeners, it's silver. That will come as welcome news to a lot of you who earlier this year were lamenting, man, how come silver isn't keeping up with gold and some of the other precious metals out there? In fact, it was selling off while gold was hitting new all-time highs. It was deeply irritating to a lot of you silver bulls out there. Well, there you go. Silver playing catch up now, up 20.86%. Now that gold has come off those highs, gold is number 3, listeners, 23.25%. So there you go. Percentage-wise, silver and gold kind of neck and neck again, which I know will please Uncle Mike. He's a big silver bull on the network, and a lot of you out there in the listening audience I know who are silver fans as well. Number 2, we're going out to the land of the beans, soybean oil, to be precise, up 28.52%. And then the big dog, we were just joking, are they squeezing it or not? It's platinum. Good year so far, up 44.77%. And then we'll throw on the downside as well and then get Dan's thoughts. To the downside we go, listeners. We're going to the other side of the soybean complex, number 5. Not soybean oil, but soybean meal. So an interesting variance there where the oil is rallying and the soybean meal is number 5 to the downside for the year, off 11.5%. Number 4, going out to the land of dairy. So once again, maybe making our breakfast meal a little bit cheaper. We've got dry whey off 19.43%. Number 3, the other EM, it's lithium, off 27.31%. And then number 2, a kind of a combo one again. It's not going to be music to the ears of some of our crypto bulls out there. It's Ether. It's creeping its way back down, listeners. It's down 31.5%. The good news is it's not number 1, but the bad news is it's moving back in the wrong direction. After having a stellar month, erasing half of its losses for the year, and really seeming like it was ready and was poised to roar back to life. Kind of sputtering out of the gates right now. So we'll see. But ETH bulls, you had a good month and then giving some of that back now. Number 2 for the year, listeners. ETH off 31.5% out there. Listen, that means the big dog to the downside, our old pal OJ, 46.73%. Another just abomination of a mark. We talked about this on the show a couple weeks ago with Carly Garner. The takeaway was don't go into OJ if you don't have to. It's a wild market, trade by appointment. Not a lot you can get done there. Certainly not for the faint of heart and not for newer futures traders. Nonetheless, number 1 to the downside for the year, off 46.73%. Dan, what are your thoughts on that divergence between soybean oil up 28.5% and soybean meal off 11.5%? And then anything else catching your eye in our year-to-date trends, sir?
Well, first, I really like those markets that you went through, that comparison, because it does give us that point of view of, what is driving this? So what's behind what we're talking about here? And you picked 2 that are really good, soybean oil and soybean meal. Excuse me. See, it chokes me up just thinking about it. If we look at, there's a reason for that. The demand, that demand side has been soybean oil. Soybean oil can be used as biofuel. When there was concern, believe it or not, going back to the Middle East about crude oil, where is it going to go? Are we going to have supplies moving? Do people have to look at replacement? That also puts pressure on soybean oil as a biofuel. And we use I'm not sure if it's still accurate because of the new administration, but we would typically use about 1/3 of our soybean crop for soybean oil, for biofuel. Soybean meal is the byproduct you get when you smash these soybeans to get the oil out. You get meal. It's the stuff left over. And that's a high protein animal feed. And if you look at the demand for that, you need to now start talking about live cattle and pork and what's happening with the meat market, the consumption of our protein. One source is meal. And another area you could use for feed would be wheat, depending on where the prices come into play. So that dichotomy, that divergence between oil, excuse me, and meal right now in the current environment or the environment we've had for this past year kind of makes sense. And now going forward, though, if things do calm down, if there is some form of peace in that part of the world, as we all know, it reverberates through markets around the globe. If that happens, then look for soybean oil prices to weaken, for them to come off. So I would be cautious on soybean oil if indeed this other things start to hold and start becoming closer to reality. You mentioned silver. What's interesting about silver, it has been, and I agree with what you said, Mark, a non-performer. It hasn't really moved lockstep with gold, which is what people would expect to see. But I wouldn't discount it. Silver, if you look at its history, silver can be more volatile than we look at gold. And it can lead the way, although it hasn't, it can lead the way. So I think from my point of view, I want to keep an eye on that market to the upside to see if it can catch up and possibly succeed. The copper, the fact that it's up 20% year to date, holy Toledo, where in the hell is that coming from? It's a market that the fundamentals are very straightforward, I think, but I guess I'm not reading it. And I say it that way because I don't expect that market to be on your list. If you think about it fundamentally, China, largest consumer of copper, about over half the world's global supply. China refines 48% of copper. So other countries in South America, Chile and Peru, they can produce it, but it ends up in some cases in China to refine it. So China is a key player when it comes to the copper market. China's real estate, China's economy. If you look at some of the manufacturing, although we are starting to see some positive economic numbers coming out of China, that is critical if you're going to look at copper. But the fact is, copper has been holding its own. It doesn't make sense to me from a fundamental point of view. But when I think about a market, what I think about is irrelevant. What's relevant is what's price doing. And if price is taking off, well, that's where our opportunity is. My opinion is just that. And the fact is, copper it's a market that wants to go higher. Right now, I'm looking for a sideways market in copper unless we start seeing some fundamental changes to increase that demand for that product. Now, that means we would be approaching $5 if that would happen. We're around $4.91 right now. So it has a ways to go, but that one befuddles me. So it's not time for a big adios
Not
in
quite
that
yet.
case.
Well,
No.
All right, Dan, we went on a wild journey on the futures rundown today. We started talking about energy, then we got into the divergence in the beans and the metals. Wild journey. Did you have fun?
Yeah, I did.
So, Dan, if folks have more questions like this, they want to reach out to you with more questions about esoteric illiquid products, or perhaps they want to check out some of your videos, where should they go? What should they do?
Well, they could mosey on over to dangramza.com. And on that website, I look at 22 different markets every day. There's a free video, and I extract some of those 22 markets to look at that free video. And that's, a few minutes, 2 to 3 minutes. And you can also get an email. If you sign up for that, you get an email to just let you know when it's uploaded. That's all that does. And that's a choice you have there. There's a course that you can take, talks about the techniques and the management strategies that I use. And there's also a more advanced video where we look at each one of those 22 markets. And what you'll see in the free and the advanced are red and green lines, which represent buy and sell levels. Those change over time as the markets move. These are not buy and sell recommendations, but ideas that I want to share that I hope give some insight into these markets and how they trade and the magnitude of change when you see a market giving us a move with the loss or profit. So those are a couple things. And if you've never traded futures, a place to begin is what you're doing right now with Mark, to check them out. Follow them. The website that I have, it's a way to look at these markets and say, are they as crazy as I think they are? Or, is there something of interest to you? And there just may be.
Check them out. I'm going to go out on a limb, Dan, and say there will definitely be something of interest to you. Check them out. Dan Gramza, GRAMZA.com, the place to go to kick the tires and light the fires. That's going to do it for us on the network today. Back again tomorrow with our doubleheader of the option block, as well as This Week in Futures Options. If you're checking out the Futures Rundown, got to be listening to This Week in Futures Options. Friday, Vol Views will be joined by Dr. Vix and Mr. Matt, the Oracle of New Hampshire from ORATS, and he'll also be doing double duty on Options Oddities. So make sure, if you haven't checked out Options Oddities yet, theoptionsinsider.com/pro. Going to be a banger this week, and we're back again next week, another episode of the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.